Financing a greener future, the power of green bonds in corporate climate responsibility. In today's world, combating climate change is an urgent priority, and corporations play a pivotal role in driving sustainable initiatives. Green bonds and other financial instruments have emerged as powerful tools to facilitate investment in climate-friendly projects and technologies. These instruments enable companies to raise funds specially designated for environmentally responsible endeavors such as renewable energy, clean transportation, and sustainable infrastructure. One notable example comes from India, where Yes Bank issued India's first green infrastructure bond in 2015, raising funds for renewable energy projects across the country. The success of this initiative not only demonstrated the viability of green bonds in the Indian market, but also encouraged other financial institutions to follow suit. Globally, companies like Apple, Google, and IKEA have also embraced green bonds to finance various sustainability projects. For instance, Apple issued $1.5 billion green bond in 2016 to support renewable energy generation, energy efficiency, and green building initiatives. Similarly, Google issued $1 billion in green bonds in 2019 to finance renewable energy projects and environmentally suitable infrastructure. These examples highlight how green bonds can mobilize significant capital towards climate actions, driving innovation and progress in sustainability. One of the key advantages of green bonds is their ability to attract environmentally conscious investors who prioritize sustainability in their investment portfolios. By tapping into this growing investor demand for ethical and responsible investment opportunities, companies can access new sources of capital while aligning their business activities with climate objectives. Moreover, green bonds often come with specific reporting and transparency requirements, ensuring that the capital raised is used for legitimate green projects. The transparency enhances investor confidence and trust, ultimately benefiting both companies and the environment. However, challenges remain in the green bond market, including need for standardized framework for evaluating the environmental impact of projects and verifying green credentials. To address these challenges, industry stakeholders, including governments, financial institutions, and environmental organizations, are working together to develop guidelines and standards for green bonds. For example, the International Capital Market Association (ICMA) has established the Green Bond Principles (GBP), which provide voluntary guidelines for issuing green bonds. These principles aim to promote integrity, transparency, and credibility in the green bond market, helping investors make informed decisions about where to allocate their capital. In addition to green bonds, other financial instruments such as sustainability-linked loans and green equity are also gaining traction in corporate climate responsibility landscape. Sustainability-linked loans incentivize companies to achieve sustainability targets by offering preferential terms based on their environmental performance. For instance, Indian renewable energy company RenewPower entered into $450 million sustainability-linked loan agreement with a consortium of banks in 2020. Under the agreement, RenewPower committed to achieving specific renewable energy capacity targets with loan terms tied to its progress towards these goals. On the other hand, green equity involves raising capital through the issuance of shares specifically earmarked for financing green projects. For example, in 2021, Indian conglomerate Tata Group announced plans to raise $1.5 billion towards the issuance of green bonds and green equity to fund renewable energy and clean technology projects. Overall, green bonds and other financial instruments are playing an increasingly important role in fostering corporate responsibilities for climate change. For channeling investment towards sustainable projects and technologies, these instruments are driving positive environmental impact while creating value for investors and society at large. As the world continues to grapple with the challenges of climate change, Green bonds offer a promising avenue for corporations to contribute to a greener, more sustainable future.